A lot of people have been asking me if I'm going to be looking to buy more Alibaba as the price continues to go down. And I've actually been doing a lot of analysis on this, and I'll share with you guys some of the stuff that I've been seeing. And so that's what I'm going to cover in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. So as you guys are very well aware, over the last month Alibaba is down approximately 20%, and year to date we've kind of gone on a bit of a roller coaster because the stock was up as far as $120 per share, and now it's back down close to $80 per share. So it's, down 10% year to date. And so, bit of a roller coaster, and I think a lot of us didn't expect that, especially post reopening. And why was that? Because you guys might remember that business is back on track in China subsequent to the COVID reopenings, and this was what Daniel Zhang said in the last transcript with their earnings, with Alibaba's earnings. He said, with the lifting of COVID related measures at the end of peak wave, everything is now quickly getting back on track. Consumer confidence and business confidence are rising. Digital transformation across different industries and sectors has accelerated significantly. So that really speaks to your cloud business. So the cloud business looks to be back on track, which is what we were looking for. And, the IMF raised the estimate GDP growth for China to 5.2% this year. And I think the most important part in all of this is the part that I didn't highlight, which was the logistics have resumed to normal operations, with the entire supply and manufacturing chains becoming active. And why is that important? Well, it's important because Alibaba was actually selling orders on their system, but then those orders wouldn't be able to get fulfilled. And what was happening is they were getting a lot of canceled orders, which is what caused the decline in the previous quarter. And so the fact that that's no longer an issue, the logistics is back on track, tells you right away that some of that pent-up demand will get serviced, but also future orders won't get canceled as a result of that issue. And so, it's looking like things are starting to get better operationally. And so it's really weird that the share price is declining in the face of that. And of course, we know why the share price is declining. There's just more fear in the market right now as the interest rates continue to rise and the Fed continues to increase the interest rates. And this is a global economy. If you have a weaker US consumer, the people who manufacture the stuff for the US consumer, the economy that does that, which is the Chinese economy, obviously gets weaker as well. And so, we're all interconnected, and that's kind of what's happening right now. And so could this mean that there's opportunity for us? Well, in my opinion, I take a long-term view, so I do believe that there's an opportunity here. And so before I go into the options tools, I just want to remind you guys that, I could charge for this thing, but I just really don't. I don't think it's important. And so I make the options analysis tool freely available to you guys. And so you can grab it in the description of the video right here. And that's the file that I'm going to reference throughout this video. Now, if you guys are new to the channel, you may not be aware that I had previously sold a cash secured put on Alibaba with a strike price of $100 per share and a premium of $30 per share. So a net purchase price of $70 per share. And the exercise date is January 19, 2024. And so, because I have a net purchase price of $70 per share, what I'm really looking to do is trying to get a little bit greedier here. I'm trying to get something in that $50 per share net purchase price range. And so that's really what I'm targeting. And so, previously I said I'd be comfortable with 60, and, I really thought about that. I'm like, what, in this environment, because there's more fear right now, I really think I can find that $50 per share net purchase price. And so, a lot of that $50 per share would actually reflect just cash on the balance sheet. If I'm able to get that type of opportunity, I'd probably go pretty strong into it. But like I say, guys, none of that is ever investment advice. I'm not trying to tell you guys how to manage your own portfolios. Always talk to your investment advisor. This is more just an analysis of what is available in the market right now. And so just looking at the January 19, 2024 cash secured puts at that $65 per share level, this one seemed kind of interesting to me. And so it was the first one that I looked at. So it's around a $5.50 premium for the $65 cash secured puts that, have an exercise or a date of January 19, 2024, and the strike price is 65, as you guys are aware. And so I built that into the cash secured put analysis model, and you can tell which one is which tab is which, because it'll say cash secured put or covered call. And so, I inputted all the important information. There's 311 days until strike. And so notice that you are getting a net purchase price under $60 per share. So this is good. I mean, I want it closer to 50. And so not good enough for me, but it's not bad, because effectively, if you're valuing the company at $225 per share, which is close to what I'm valuing it, but not really, you're buying it at approximately 25% of its intrinsic value. However, the 10% annualized yield is a little bit low. I'm not going to lock up money for 311 days without getting a higher return there. And so the cash secured puts aren't there for me with the January 19, 2024s. But what about the covered calls? You know, the at the money covered calls. The stock is trading at around 83 bucks per share. And so, you know, you would take a $3 capital loss if you got exercised on this one. But, you know, does the premium make up for that? Well, let's take a look. So you can see here's that current share price of $83 per share. There's a strike price of $80 per share. And so, you know, the difference between those two is going to be your capital loss that you suffer as a result of this $3 per share difference between the two. Your premium $17.50 should more than offset that. So you generate a total return of $14.50 essentially. And so your total annualized yield is not bad. It's 0.23%. So that is not bad. So I like where the yield is at, but once again, the cost basis, the 65.50, it's very close to that $70 per share cost basis that I currently have on the current option. And so this is not exciting for me, but you know, it's something to consider. You know, if you are looking at cash secured puts, so, you know, or sorry, covered calls. And so, yeah, I'll leave that one there. But once again, it's not what I'm looking for in this environment. And so just taking a step out, the January 17, 2025s are available. These are 2 years out. You know, there's only a few people that are crazy enough to buy 2-year out covered calls or cash secured or sell cash secured puts. I'm one of those crazies. And so, you know, once again, I'm looking for a sub $60 per share net purchase price. Well, here's the 70. And if I could sell this at $10 per share, of course, you know, my net purchase price is 60 bucks. So, you know, not a bad place to start. Once again, I'm really looking to get closer to 50, but I could tell right off the bat that the closer to 50 ones aren't going to do that well because, you know, 650, call it, divided by $60 per share, you're looking at maybe 10%, and then you got to annualize that over 2 years. You can tell right away that that's going to be in the single digits. So that's not going to work for me. And so that's why I'm looking at the 70, but the 70 doesn't look that great either. Let's take a look. So you can see here that when I input the 70, because you have 2 years for it to return on, you're not getting 14.3%, which is just the $10 over the 70. You have to annualize that over the 2 years. I guess, you know, divide that by 1.9. That's what 679 divided by 730 is, which is the number of days remaining versus, you know, the number of days in 2 years. You're actually getting an annualized yield of 7.7%. So yeah, you're getting a net purchase price of $60 per share, but is it worth tying up your capital for for 7.7% of a return? I don't think so. And so this one is not for me. But what does the at the money covered calls look like for the January 17, 2025? Remember that the January 2024 covered calls, you got a really high yield of 20%. Just the cost basis wasn't low enough. Well, that tells me that I can probably get somewhat of a lower yield, but acceptable, maybe around 15%. And I can get my cost basis as close to that $50 per share level as possible. And so looking at the $80, you can see that if I can sell this for $25 per share, you know, my cost basis would be around $55 per share, but because the current share price is $83 per share, I'd lose 3 of that. So, you know, probably around $58 per share is where my cost basis would be. And so I might wait for the share price to actually come down to $8 before I sell an at the money covered call. And, you know, part of that entails buying the security itself. So there's something to look at there, but let's take a look at how this looks in the calculator. So you can see that once again, there's that $3, $80. So you see there's that loss. I put $25 in as the premium. So notice that the total annualized yield is 14%. The current yield is actually 30%, but you know, with the and the 16 is just the premium, but you also have to take into account the loss, which is why that 16 goes down to 14 on an annualized basis. And your cost basis is 58.16, and that makes sense because the 80 minus the 25 will get you to 55, but then you have to add that loss, right? And that's why your cost basis is actually 58, because you're buying the stock at 83, you're not buying it at 80. And so I hope that makes sense. But this is starting to look interesting. But once again, the cost basis, I want it to be closer to 50, and I want this to be higher than 15. So it's not really there. But the only thing that I will point out with very long dated options is that they are not the same as short dated options. You have 2 years. Notice here, you got 679 days, so almost 2 years to compound this premium of $25 per share. And so if you compound that And remember, you receive the premium on day one. And so if you compound that $25 per share premium at 10% for over those 2 years, like 10% annualized over those 2 years, you actually have a premium of approximately $30 per share. And so for these very long dated covered calls, you have to take that into consideration when you look at these premiums, right? Or it could be something that you take into consideration. I don't in my analysis, but it's just a point that I want to point out because a lot of people miss that point. And I remember I put on a free cash secured put call once, and a lot of people were fascinated to hear that point. And so I just want to make that point once again because some people just don't think about that. You get this money up front so you can compound it. And so overall, I'm not seeing anything that I'm crazily excited over. However, I just want to share like what my dream scenario would be. And I think we're kind of close to there, right? Because the premium right now is around $25 per share for the at the money covered call. If the share price comes down to $80 per share, and the premium goes up to $30 per share, I think we're in business here because, your annualized yield is $20.16. And notice how your annualized current yield and your total annualized yield are the same. And the reason for that is because there's no capital loss happening. And so the cost basis is as close to $50 per share as it can get. And so, of course, because it is $50 per share. So, I'd be really salivating if something like this plays out. So, we'll see. I'm keeping an eye on this. We'll see how the market presents this opportunity. The share price might actually come further, like lower than $80 per share, around $75 per share. And that might be the time where something like this becomes available. I don't know. I'm just going to keep watching it. And so we'll see how it plays out. Now, I want to know what you guys think. What are you guys looking at? Are you guys going to double down if it goes into the the 70s or the 60s? You guys let me know in the comments below. The other thing that I really would stress, and I do this for my portfolio as well, is I don't like to go all in on any opportunity, not even Alibaba. And so, Alibaba has been a relatively small position in my portfolio considering the overall portfolio, right? And so, around 10% or so, and it's coming down as more capital is being added to the portfolio. And the reason why Alibaba is not a material position in the portfolio is because no stock is a material position in the portfolio. And the reason for that is because we could always be wrong. And, I don't think I'm smart enough to think that I can't make a mistake on any particular security. And so I highly stress portfolio diversification. I know that goes against what a lot of super value investors say, but it's just how I feel comfortable, and it's the advice that I would give if I were to ever give any advice. But once again, on this channel, it's not financial advice. Always talk to your investment advisor when you make investment decisions. Now, the other thing that I do want you guys to pay attention to is the hostility between China and the US has been increasing. And so the question is it actually time to just walk away from our Alibaba investment as a whole? Because it seems like this stuff is never ending. Well, I actually took a look at everything that has come out over the last 2 months or so, and you can actually get to that video right here.